Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. Today's jobs report was the worst on record, but guess what? It wasn't as bad as expected, and that helped keep a bid under markets, equities that are really trying to break out here, specifically the NASDAQ. Let's take a look at the chart real quick. Now, on the NASDAQ, this is the previous high. We closed near it yesterday, and today overnight extended gains. Now, we are off the high by about 0.5%, as much as 1%, but this new high here today is showing a breakout. That's that line there. This line is our previous closing high. It's also aligned with about 9,000, what was major three-star resistance, a level that we've said it's been tough to close above. And then this line below here, is even on the year. The NASDAQ's up about 5% on the year now as it's breaking out above new swing highs. It's a heck of a nice 4 or 5 day run. But take a look at the S&P. The S&P, this is still the 200-day moving average, and this is even on the year. It's still about 10% away from being even on the year, and it really shows you how much tech has done in bringing this market back. Now, the currencies have been pretty quiet here on the session, but one thing we're really watching is the Treasury yields. And, actually, before we get into the chart here, first, yesterday, the Fed funds rate turned negative going at the end of this year into March. So we're seeing December Fed funds futures trading above 100, which shows expectations for Fed funds to be negative later this year. That boosted gold, boosted treasuries, but some of that is coming in. Let's take a look at it. The actual short end of the curve, the 2-year, hadn't made new lows today, is staying sort of suppressed down there. Yeah, the yield is coming up a little bit, but this shows you this sort of slow move lower to new lows in the 2-year. The 5-year, similar, but it made new low today. It's come off on the yields just a bit. The 10-year and the 30-year are a bit different. The 10-year is a well off that 50 basis point area. It broke out above a trend line, and the yield is consolidating here after a solid day. The 30-year, a lot different, as the 30 years been more sideways and range bound, and you can see this here in the prices. This is an intraday chart here on the 30-year, very sharp sell-off. The move lower started happening. This is about 6 a.m. Central Time. Happened before the better than expected non-farm payroll, but it was non-farm payroll that pressured that 30-year pretty sharply. And then what has it done? It's weighed on gold. So we were really hopeful for a breakout in gold this week. 1735 was a big area. Could not really hold out above a new swing high overnight, and it's starting to fall back fairly sharply today, well off the highs. It needs to hold 1705. Now, it's had a lot of construction here from this neckline breakout of the inverse head and shoulders we've talked about many times here. And you want to see, again, construction above 1700, about 1705. If it can hold that low and start to move better Sunday night. But again, treasuries are going to weigh on that. A stronger dollar could weigh on it if the dollar bounces back. But one thing that's been a tailwind this week for gold is silver. And silver has this sort of wedge breakout. Now, a tightening wedge becomes bullish. This is a descending wedge pattern where you sort of having suppressing prices lower than they can extend lower. You break out above here, and that can be a very bullish pattern. It's out above the 50-day moving average. We talk about this 50-day moving average all the time here about silver. So this is a very, very encouraging chart. Get this bullish breakout, but still, silver has its work cut out for it. 16 to 16 and a quarter. It needs to close out above there. So it needs to close above there, and then it can give gold the tailwind. It can fuel gold back up to those highs and potentially through 1800. But is it going to be silver that can do it? If the treasuries start to roll over a bit, it has to be silver that follows through to give gold that leg. So as we go into next week, it's going to be a lot of volatility again. I mean, these markets continue to bring volatility. Manage your risk. We're here to help. Give us a call, 312-278-0500. Remember, though, futures trading involves substantial risk of loss and is not suitable for all investors.